got that first distribution check. I look at that $125 check. That covers the groceries for a week. Or that covers car insurance for the month. When you start to look at the expenses like that, it's like, oh, like I really don't need that much just to cover, the mortgage, typical, utilities and groceries. And I was like, oh, like I can really do this.
Hello, and thank you for joining us today on the Gentle Art of Crushing It show, where we focus on learning and sharing with our listeners all there is to know about how to create success in our lives. This show stands on the shoulders of giants. Our mission is to empower and inspire our listeners to create the life of their dreams whilst having a blast in the process. Let's celebrate life together. Welcome to the show.
All right, welcome back to the Gentle Art of Crushing It Passive Investing Edition podcast. My name's Randy Smith, and I'll be your host today. And we have got a really good guest today, Trevor Oldham. Trevor is actually the founder of Podcast U. He's a W-2 guy, and he's starting to play in this passive investing space as well. So, Trevor, welcome to the show.
Yeah, thank you, Randy. Excited to be here and excited to be chatting today.
Awesome. Well, why don't we just jump right in? Trevor, can you tell us a little bit about your background, kind of what you've been doing up to this point, and your path to passive investing?
Yeah, most certainly. So I would say I got the company that you mentioned, Podcasting You, and been doing that for about 6 years now, doing that ever since I graduated college. And to preface it, within that company, we work with like a lot of real estate investors. So, around these guys, we're helping folks raise capital. And one day my business coach was like, why don't you get into real estate? And I was like, well, I've never really thought about that before. Here I am surrounded by all these real estate guys all the time. And never really thought anything about it. And, I had my W-2 job rolling with that. And it got to a point where I was so busy in my W-2 job. I was so busy in my own business. I was like, there's got to be another way, investing in my 401k. And, you look at the charts, over 40 years, you're probably going to make a 8 to 10% return. It's not bad. It's decent. But I'm like, I don't want to be 65 and doing, working my W-2 and running my side company at the same time. So I was like, what can I do? And that sort of sent me down the passive avenue path. And then that's where I discovered passive real estate investing. I was like, oh, I can go out and own an apartment complex, but I don't necessarily have to be doing any of the managing. And then I started to dive down the different asset classes within real estate. And that, really turned me on. And it made me realize like, hey, if I had $1 million, I could go invest it and get a 10% return and make 100K a year, or I could put 2.5 million in the market and conservatively say if you're using the 4% rule, you have to get that 2.5 million. So I mean that's $1.5 million more I need in the stock market as compared to investing in real estate. So I look at that and I'm like, well, that's a pretty big difference. That's probably 10 to 15 more working years at least. So when I saw that in the real estate, and honestly, I made that first investment and I invested in mortgage notes, and I just made a small investment. And that I had never really done any investing outside of, the stock market. And I started to get that first distribution, got the first distribution. I was like, oh, like, this is pretty nice. Next month, first of the month got a distribution. And, that sort of kickstarted my journey, into being, more of a passive investor.
Are you interested in real estate investing but don't know where to get started or think you don't have the time or money? Are you stuck in your W-2 because the golden handcuffs make it hard to walk away? If this sounds like you, check out impactequity.net and schedule some time to talk with the founder, Randy Smith. Randy went from massive income to leaving his W-2 through passive income, and he can help you do the same. www.impactequity.net.
Love it. So in what was it, 2 minutes, you covered a lot of ground there. There's like 16 different topics that I'm taking notes on that I want to ask you about. First of all, you mentioned you have a business coach. I'm intrigued with that. I also have a business coach, and it's just been transformational for my life. I'm curious, have you been working with a business coach for long? What has your experience been? What kind of impact has it had on the business?
Yeah, it's been phenomenal. I want to say I started work with them probably about 2.5 years ago. And I just got to a point in my business where I just couldn't, not that I couldn't, but I just had a hard time growing. I used all my knowledge and I was like, how can I continue to grow this business? So I ended up hiring a business coach, and, that was good. I worked with him again for probably about a year and a half, 2 years, and that was great. And then I sort of hit a brick wall with him. He got me to a point where I felt as though I'd hit my max with him. So then I worked with a mindset coach, and that was phenomenal. one of the goals that I had, when working with her. So I started working with her back in June of 2022. And something that she worked with me was, getting over my fears. So one of my fears was actually investing in real estate, coming into her with the excuses, I don't know what to do, I don't have the connections, it's a lot of money to get started, and she continued to push me, so she was phenomenal in that sense. And then now I've actually started working with a third business coach. And the reason I'm working with him is I got offered by a venture capital company to buy my company, and it was decent. It was in the six figures, but I figured I want to try to get a seven-figure exit out of it. So this particular individual, he had grown his own company from 0 to 2.4 million, his marketing agency, and then eventually sold it. So I figure, why not just go to someone that did exactly what I want to do? Why try to figure out the steps myself? I'd rather pay him. We meet on a weekly basis, and we've had a couple of sessions, and it's been phenomenal. It's just so nice just having someone come in and look at your business that's not just you or a family member or someone on your team. Like, just the guidance that someone that's more successful than you can provide is extraordinary.
I love it. Yeah. So that is success definitely leaves clues. And if there's somebody that's done what you want to do, why not pay the fee to go
Hmm.
work with those folks so you can help streamline that process, speed up the time frame. Absolutely. So, yeah. So it's interesting that you talk about having been with a coach and then kind of hit a stage where maybe it was time well spent, but you weren't learning anymore. You weren't getting pushed. And I've come to the agreement as well that coaches will take you to a certain level and essentially they'll take you to where they are. And then you got to
Hmm.
jump up to the next realm. And then that coach will bring you up to where they are and keep doing
Yep.
that leapfrog thing over and over again. Um, but how amazing that you have opportunities where private equity is taking a look at you or outside folks are taking a look at you to potentially purchase this little small side
Hmm.
hustle company for strong six figures. And the goal is to be seven figures. So a lot of folks that I talk with, they're, they're nine to fivers, they're W2ers. They might have a spouse and kids, and they just can't figure out the time to do the research and education process with passive investing. So, talking to that newer passive investor, what kind of advice would you say to those folks that don't think they have the time to be doing all of this?
Yeah, and that's a great question. And I would say for me, if you have an hour a week, 30 minutes a week, just start talking to sponsors. For me, I was attending networking, free networking groups that I found on Zoom. I know, Randy earlier and I were talking about Don Spafford. So I met Don, through one of those, networking groups, and, found out what him and his company does. And, then eventually, schedule a call outside that networking group. So that's been, phenomenal. And I would say early in my part, I didn't even know the difference between a 506C and 506B deal. I had to really, get granular with trying to figure out what that meant. Am I accredited? Am I non-accredited? What's the difference? And everything that entailed. And then for me, it was just I tried to just talk to 2 to 3 different sponsors a week. And early on, I didn't really know what I was asking them, like, what type of questions do you ask? It just was super unsure. It was more or less like, honestly, sometimes it was like super awkward on the call. With the sponsor, they're like, "Do you have any questions?" And I'm like, what questions am I supposed to be asking you? That type of thing. But yeah, it was just pushing myself to hop on those calls, and I kept a track list of the different sponsors that I talked to, and I honestly just started looking at deals, as much as I could. I would go on Marcus and Millichap, check out their site, see the type of deals that they have going on, going on LoopNet, taking a look at their deals, see what they have going on. I know I purchased Michael Blanc's like deal syndicator analyzer, and that, you plug in a couple of numbers and, you get an estimated price on a building. So I could tell, hey, is this building too much? Is this building, a good price? And then you start to get a good idea, a geography of different places within the country. Whether you're talking like, an apartment in San Diego is going to be way different than apartment in Texas versus apartment, say, in Cleveland, Ohio. So then you gotta, it just again, you just take that time, and again, I didn't have a lot of time running these two businesses, but I try to take a few minutes out of my day just to look at different deals, run some numbers, and then try to schedule 2 or 3 sponsor calls a week. And this isn't to say that happened every week. I mean, some weeks I was just super busy, and I couldn't make it, but I just tried to stay on top of it, and knew that, the more sponsors I talked to, especially for me, so I was coming at it, I'm non-accredited, so I had to, make the connection with these sponsors themselves. They couldn't be reaching out to me. So it made it a little bit more difficult, but I knew that if I wanted to invest in a deal, I didn't want to invest with this first sponsor that I talked to. I wanted to talk to about 20 or so before I made that initial connection. And again, it was about a 4 or 5 month process there for me to feel comfortable before, making that first investment.
Yeah, I like that you said. I mean, ultimately, none of us even know what type of questions to ask early on, other than, "Are you going to lose my money?" Like that's the number one thing that I'm worried about. Um, but I like how you even said, like, what questions am I supposed to be asking? I have actually said that to folks, and I'll end conversations quite often, like, "What have I forgot to ask? What are you normally telling people that we haven't talked about today? Like, what are the big watch outs?" Or if you're investing your own money, what are the number one things you like to ask? Because more often than not, these guys, not only are they operating in the space, but they're also investing pretty heavily in the space as well. So what type of things are they looking for other operators that they're working with? And of course, they're going to give you kind of layup things that they can answer very well, but
Mhm.
at least it gives you a better idea on where they think their strengths are and what they're looking for in their dollars as well. So now you had talked a little bit about this idea of, $1 million at 10% is the same as, what was it, 2.5 million at 4%.
Mhm.
And I love that your mind goes there, because I'm a numbers guy as well, and my mind goes there as well. And I remember doing that calculation where all of the 401k platforms will have these calculator tools that if you keep investing at the same rate, like, put in your magic number and it'll tell you how much longer you got to work. And I remember towards probably the middle of my career, I was doing those calculators, and I was going to have to work like into my 70s,
Mhm.
which was a really scary thing to think of. So to think that you could essentially cut that number down by 60 or 70% by looking at alternative investments is a pretty powerful statement in and of itself. So I'm curious, how did you first start to get exposure to this space? You mentioned that you were doing the podcast in the real estate space and you had a coach ask you, but like, from the question of why don't you invest in real estate to actually jumping in, what did that actually look like?
Sure. So actually, what that looked like. So I had that question in the back of my mind for a few months and was still trying to figure it out. So I joined this networking group to honestly to more or less promote my company. To get my company more out there. And then that's where I started to learn more about those syndications. And I remember there was this guy, I believe his name was Dave Leon. He was in one of these networking groups, and he had been an LP in about 3 or 4 different deals, and he was about a year and a half, into it, so a little bit ahead of where I am. And I hopped on a call with him. And I remember my wife and I, we were going away for the weekend. And, I talked to him on the phone for an hour and he just laid it all out there, what it takes to invest, what to look for. And he honestly, he challenged me and he said, I want you to invest in your first deal by this time next year. So this was going to be August of this year. So August 2023. And I gave him the excuses, oh, I don't know what to do. I don't know, how to find these sponsors. And he said, just spend, 5 to 10 hours a week just trying to figure it out. So that sent me down the Bigger Pockets platform, and that's where I learned about the 506, C, 506B deals and started perusing their forum. Then, I ended up talking to Jim from Left Field Investors, was hesitant about joining that group, joined that group about a month or two into it, and then just poured over that resource. I mean, I know Randy, being within that group, the forums and people talking about sponsors and deals and everything you could ever need as a passive investor is a part of that community. And that really opened my eyes up for me. And then what really got me going was some of the folks in the passive investing community. They're doing a meetup in Boston, and I was going to be in Boston for that weekend. We're over there and met with them, and there's about 6 or 7 individuals, and they're all W-2 employees, and they're just investing passively. And I was like, hey, like these are just regular people. Like this isn't just a far-fetched dream. Because early on, I talked to these sponsors, and everyone sounds it's the best thing in the entire world. And they're like, are they BSing me, or is this actually a good thing? And I talked to these other folks in the community in person, and they tell me about their deals and how long they've been doing it. And that just gave me the encouragement of to go out there and to do that first deal, and really just being part of that community was I don't know monumental for my learning curve and just getting around other passive investors. And I can say, Jim's platform is phenomenal. I don't know of any other passive investor communities that are as good. I know they mentioned in Boston a couple other ones, but they didn't sound as friendly as our current as our current group. So I'll stick with it. But yeah, I was just trying to connect with other LPs and connect with different syndicators.
Love it. Yeah, Jim and it's Jim Pfeiffer from Left Field Investors. We actually had him on our podcast, I don't know, a month or two ago. And then I just did an in-person event with him here in Phoenix with our, kind of co-partner, Rise 48 Equity. And it was just an amazing event to get all these people together. And we had 50 people in the room that are all passively investing in real estate. And there is nothing that will build more confidence in investing with an operator than casually running into somebody at a meetup that's also invested in the same deal.
Mm.
And Jim Pfeiffer talks about like kind of his first experience where he ran into a guy that was investing with a deal that he had invested in. And all of a sudden you think, okay, if I'm an idiot, at least I'm not an idiot alone. And my due diligence process must have lined up with this guy's. So clearly this could be a good deal. So I can't stress that enough. And that is really kind of what was in the backdrop as I was starting to put this podcast together and impact equity as well, is really let's just combine our resources and vet as many deals and operators as we possibly can. And then hopefully on the backside of that, we all learn a bunch. And yes, we want to make a bunch of money, but there's a fellowship, there's a community that's also growing throughout that process. So like-minded individuals focusing on like-minded ideas. So neat stuff. So let's talk about that. Then you got the challenge. You said 1 year from today, you're going to invest in a deal. What was that first deal? What made you pull the trigger on that deal? Why did you like it? And I'm sure I'll have other questions as we get into it.
Yeah, that sounds perfect. And I would say, the first deal I got into, was the mortgage notes through Chris Savani's company, but that wasn't, that big jump of income that I was putting into the company with him. This was a definitely smaller investment, not as the typical minimums that you would need to get into, your standard deal as an
Yeah.
LP. So I just wanted to go with him, super safe return, 8% cash flow, that
Okay.
sort of thing. And then for me,
are you comfortable sharing what the minimum was with him and
yeah,
not
it
what
was
you
like
invested?
500. Yeah, it was like $500 to get into it.
No
Now
kidding.
it's like 2,500, and they do non-accredited, accredited. Yeah, so it was a super small minimum. So I recommend that company to anyone that wants to get started and doesn't have like 25 or 50K minimum
Sure.
to get in with them.
Okay, and what was the name of the company again?
Yeah, but it's going to be 7E Investments. So just literally just the number 7 and then the letter E.
Perfect. And of course, we're not advisors. We are not providing financial advice, but that was your experience, a positive experience with those guys. Okay.
Yeah, they were phenomenal. So got in with them, and really for me, I thought I don't want to be working forever. I have my income set aside, and I had some money in a brokerage account, and I was like, you know what? I should just go in and invest in real estate. Not that I wanted to get the 100% depreciation that we were going to get, for the last year in 2022. That wasn't sort of the thinking behind it. But I connected with this sponsor. She actually was one of the folks that wrote on Bigger Pockets explaining the differences between a 506C and a 506B deal. And I had a phone call with her probably, I don't know, 3 or 4 months prior to it, got on her investor list. She had a multifamily deal. I was, a little bit hesitant a multifamily, just trying to understand it. And then the triple net lease opportunity came through, and I hadn't really heard of it that much. Started to do my due diligence into it and realized that I could get in. The minimum was 25K, so I felt comfortable with that. 7 to 10%, annual cash flow paid out monthly. I like that, getting paid out monthly. The buildings were there was a couple of different buildings where the tenants were going to be $2 generals, a Family Dollar, and they just acquired a vet office. And I think they're looking for more property as part of the fund. So high corporate grade tenants. I like that part about it. It just seemed really nice, really stable, just opportunity. And, she was great. I had a bunch of questions for her. I did a background check on one of her partners, and he came back with just some things that I thought were interesting. So I had to ask her about that, and I had to, I guess, for lack of a better word, call them out on that. Be like, how can I invest with you if you don't, you don't do this? So basically, long story short, the partners are going through, I guess, a messy divorce, and some things came up. But part of that, but she was great at answering my questions, and I can say there's other sponsors that I was interested in investing with, and I would ask them questions, and they would just never get back to me. So I was like, well, the kind of the end. That's kind of the end of that relationship. So she would get back to me, in a reasonable period of time, and yeah, just sold off the stock that I had. I think I took like it was like a $2,000 loss, but I figured, hey, the $2,000 loss I'll get from selling off the stock, I can use it, turn down my income a little bit, last year. And then, I figure, I can put that into real estate and it's just more comfortable for me. It's sort of like that learning opportunity where, if I were to get that 25K minimum, it'd probably take me a couple of months to get that money drummed up. So I already have it sitting there in a brokerage account where the rest of my money is tied up in an IRA and a 401k, which, it's a little bit trickier to get access to. I mean, I know that there's ways, but I wanted to get into this deal and got into, I think it was back in November, and got that first distribution check in December. And, that was, I believe it was like 125 out of that. So I think we're getting about a 6% return right now. And they have one more property to buy. But I mean, I look at that $125 check, and obviously, 6%, I want to get a little bit better than that on my deal. But like, that, covers the groceries for a week, that covers, the car insurance for the month. When you start to look at the expenses like that, it's like, oh, like, I really don't need that much just to cover, like, the mortgage and, your typical, utilities and groceries. And I was like, wow, like, I could really do this. I not, obviously you need a decent amount of money. You're not going to put in 25K and get, 10K a month coming off of it, or anything like that, unless, you invested with Bernie Madoff or something, along those lines. But yeah, it's been good, getting that comfortable, monthly cash flow out of it.
Love it. Yeah. Yeah. It's interesting. I have a lot of conversations with folks that say, the stock market's down now. I don't want to pull my money out now because I want to ride it back up. And I'm curious, clearly you sold for a loss.
Mhm.
Why not leave the dollars in the stock market for, best, in my opinion, best case scenario in the next year to get back what we lost versus pulling the money out and putting it into real estate? Do you have any thoughts about that?
Yeah, so for me, it was really about 15% of my net worth that I was pulling out of it. So it wasn't like I was selling like, half my stock to
Yeah.
get into it. So I just wanted to pull the trigger. I just feel like I was just gonna keep waiting on the sidelines, keep talking to sponsors, and just say, oh, another deal comes across, and then I'll invest. And for me, it was like, I've been in the stock market. I've been doing it for quite a while now,
Mhm.
and I like it, but at the same time, I'm down. Where can I put my money? Where, for the most part, that, especially in this triple net lease deal, it's gonna be stable income coming in, where I'm not getting that in my stocks. And in my stocks, I only invest in one, just the S&P, 500, or I do the Fidelity Total Stock Market Index Fund. So we cover
Yeah.
the entire market. That's the only thing that
Yeah.
I invest in. And, is that's not really producing my income for
Mhm.
me per se. That's not, I might get a dividend here and there, but it's not producing like monthly cash flow or
Mhm.
anything like that. Where, yeah, you could invest in a real estate deal and they could withhold distributions. But for the people that cry that, at the same time, the market's gone down 20% over the last year. So they both have, it can happen in real estate, it can happen in the
Yeah.
stock market. So it's sort of, for me, I figured I'll get that, if I get a 10% return, I'll be beating the market, typically, let's say 8%. And that, it's just worth it. Yeah, it might not be the best idea to sell off that stock, but for me, it made sense. I just wanted to go in with it. Again, if I was down like 20,000, I probably wouldn't be selling it off. I'd probably stick in it for the long term, but only being
Yeah.
down about 2,000, I decided to go with it and, offset my income a little bit even further, last year.
Yeah, yeah. It's an interesting conundrum there, where you start to think about it. Say you have 100 grand in there and it's down 20%. It's actually got to increase more than 20% to get you back
Mhm.
to whole. So I think it's like 25% you have to get back. And my mindset is that if I can put dollars into a real estate deal that based on performa will double in, let's call it conservatively 5 years, even 7 years, but let's say 5 years, that means you're getting 20% per year. So on the slight chance that you do get the 25% back in year one, I have I have no confidence in the stock market that we're going to see an extra 20% for each of the next 4 years.
Mhm.
So I think even pulling the dollars out, even though you've lost, it is a good opportunity to get those dollars into real estate, which are going to they're going to go out and then come back with more friends, I think, than they will with the stock market. And I think it's important too to take a look at something I've been watching real closely now that I'm not in the W-2, is that like what type of investments are going to give me livable, I'm calling it livable returns that I can
Hmm.
actually live on versus just see a bucket grow or fluctuate in price. And when I had money sitting in the stock market, unless it was dividend based, I was not getting any type of monthly checks on that. So all really important stuff. I think it's all based on personal preference, but I think those personal preferences are actually driven by the education and the knowledge base that you have in the space. And I think the majority of the groups working at W-2 or even small business owners, they just don't have access to most of this information. So
Hmm.
that's a big part of what we're trying to do here as well. So now you've mentioned triple net lease, and I know what triple net lease is, but I suspect there are folks on listening today that don't know what that is. Can you help educate the group on that?
Yeah, most certainly. So basically, the tenant is going to pay your property taxes, maintenance. And I feel like I know I'm missing the last one. I don't know if
I
you,
think it's repairs, right?
yeah, and
Like
repairs. I know.
major repairs. Yep.
Yep, exactly. So basically the tenant takes care of everything. So you could imagine if you own, say, a duplex, something breaks, you got to go and fix it. In a triple net lease, if something breaks, the tenant's gonna go and fix it. So in this scenario, it might be the Dollar General, or it might be the Family Dollar. So it's pretty low risk. You're basically just renting out the building, and then they're taking care of all of that. The only thing that they're not taking care of is rent, but they're paying you a rent check, which is a good part of it. But because it's very low risk, your returns are going to be lower. But that's why for me, I felt comfortable going in it on the first time versus a massive, let's say if it's a 30% occupancy, multifamily deal, heavy value add, no cash flow to year two or three. That scared me in the beginning. I would just want to do something, I knew I'd be getting monthly income coming in, the next month or two.
So yes, and thank you for walking through that. I think it's a really it's a more stable type of investment. It's much more dependent on the tenants because a lot of times it is single ass or single tenant
Mhm.
situation. And you mentioned something else in that space that these are all a certain type of tenant. Can you talk about that a little bit too?
Yeah, so you have your corporate grade tenants. So those are going to be like you can think your Fortune 500 companies. Like think of like
Yep,
your Staples, your AutoZone, Walmart, Target. Those are going to be your high. Those are going to be the most stable assets. Then you have like your mom and pop shops. You have like your local pizza restaurant, your local sporting goods store. Typically, you can make more money renting out to those tenants, but the problem is they're high risk of default. They're more likely to go out of business. So you have that risk versus reward where if you do these more high corporate grade tenants, again like the AutoZone Staples, it's going to be less risky, so you have more guaranteed income where you could go buy the building down the street. Like I saw in my local area, someone's offloading a portfolio. I don't know how they did it, but all the local post offices, they bought up all the buildings, and
I've
they're
heard of
offloading
that.
their portfolio. So you can imagine that's potentially risky. Where I don't know where the post office would fall under corporate grade tenant, but my worry would be if they left, could you replace it? Because there'd probably only
Sure.
be another post office coming in. I thought that was pretty fascinating concept of them scooping up all the local post offices buildings and then
Yeah.
offloading their portfolio. But yeah, that's really the two main differences that I found with them. And
Okay.
I like the corporate grade tenants. I get scared of the local
Yeah.
retailers and stores like that.
Well, and honestly, I would love to have a lease with the government because I don't think the government would default because I believe USPS is government, right?
Yep.
Government run. So yeah, yeah. Well, thank you for educating us on that. It's an interesting space. I haven't spent a lot of time there, but it is something at some point I want to move into. Um, Different type of operator generally in that space as well
Hmm.
than what we see in these kind of high operations based businesses like multifamily or short-term rentals or those types of things. So all right, so you've got three passive investments, I believe.
Hmm.
Are you what, about a year and a half into this?
Yeah, actually, not even like probably since August. So whatever, however long that is, probably 5, 6 months, or yeah, I don't have the
Okay.
math. 7 months. Yeah, it's been under a year now.
Okay, so the coach gave you the challenge of within a year,
Mhm.
let's get you invested in one, and you're at three. So it seems like you might have caught the bug here a little bit. In my experience, once I see folks jump in and start getting distributions and seeing what the full process looks like, they tend to start shifting more and more of their capital over to the space. So what does the rest of this year look like for you? Are you placing more capital, doing more research? What are you doing?
Yeah, it just yeah, place more capital, doing more research. I got actually into a deal back in February, so that was a self storage development deal. I'd actually talked to the sponsor back in September, and with this particular sponsor, the minimums were 50K for that. So I asked, could I do 25K, and she said at that time no. And I saw that the fund was closing in February, and I had the 25K sitting there. And I said, "Hey, can I get into this deal? For 25K?" I basically asked her again, and she was like, "Yeah, sure. The deal's closing. Why not get in?" And that deal seemed good. And the reason I invested in that deal over the another triple net lease deal is one, I wanted to diversify. And with this particular self storage development deal, I probably won't be getting any cash flow out of it, probably at least 18 months. But there's a good opportunity to 2 to 3x the money, your money invested. So within 5 years, my 25,000 should be anywhere from 50 to 75,000. It was a good opportunity. The operator hadn't bumped up rents in 7 years. They had no technology. They had about 3 to 4 or 5 acres of land that was it was sitting there but not developed at all, that they could put additional units onto. So I like that more, that equity play, where the triple net lease deal, probably double that initial investment in 7 years. For this one, I don't get the cash flow as much early on, but I could double that money, triple that money in a shorter time period. So that's why I decided to go with that deal. And then I know Randy, we're part of a tribe together. I wanted to test out multifamily, and we got into that deal with Lone Star. So that's, I can't speak to that so far. That the deal looks good. We'll see how it goes in the future. But yeah, for me, just continuing to deploy assets in the future. Now I don't have anything else to sell off in my portfolio. It's just, it's in my 401k and it's in my IRA. So I stick with that. And I can say from my personal standpoint, I haven't gone all in on real estate yet, still trying to figure it out. So, like I'll max out my 401k through my job, and I'll max out my Roth. And then, I'm able to do that off my W-2 income. And then my side hustle income, I just put money away every week to invest in real estate. So right now I'm just basically building up that muscle to get into another deal. I have that capital not in the market, just in like a high yield savings account. So I think it's like 4% a year. You get on that, not beating inflation, but at least it's, better than zero. So yeah, just looking at additional deals. My goal this year was really to get up to about $500 a month in passive income. Right now, I'm still at about that $125 mark with that particular deal. I anticipate that's going to be up about 150, 200, and then that self storage deal, that'll probably take about another 18 months or so, and that'll be similar. I think it's 8% preferred return once they start renting out the new units that they develop. So similar, probably about that 150, 200, depending on how well it goes. So that'll get me near that. And then the Lone Star deal, I think first year is like $17 a month. So definitely small, but it's well worth it. But yeah, just continuing to build that up, continuing to look at different opportunities. I think, I can't say which asset class I like the most right now. I love all of them. Everyone I talk to, like to give you an example, I was talking to a sponsor yesterday, and I don't want to invest in California. It's just not the type of state I want to invest in. She got 7 units under contract in San Diego for $875,000. The property next door is 5 units for $2 million. I don't know exactly. She hadn't sent over. It was just on the call, so I didn't know what the property looks like. But it seems like there's a lot of opportunity there to come in and basically flip the property. I mean, and even 875K. I mean, if she's raising, I don't know, 175 or 200, 250K for that deal, the minimums are probably going to be about 25K or, even smaller. I mean, it's such a small deal. So that's something that, I didn't even know I'd be interested in. And then I know like Don Spafford, Happy Camper Capital, that's one, RV and campground resorts. I've seen people that do short-term rental funds. So it's like, I'm just like exploring the whole world, and just testing out the different asset classes. Again, I don't have like a specific one. It's sort of like I don't know what I don't know, which is probably not the best thing. But I'm big on the jockey. I talk to the sponsor. They sound good. How are their references? How are their past deals? At the end of the day, you could work with the best sponsor, and something could go wrong in the property. But are they going to be able to handle it? So it's for me. I want to make sure the deal looks good. But at the end of the day, I want to make sure the jockey, the person leading the charge that's running the deal. They know what they're doing, and they have that experience, and I trust in them. I'm not the one on site management and managing the property. That's why I invest passively, so I don't have to do that. I'd rather find someone that knows what they're doing and is able to handle all of that for me. And then I get the benefit of, I give them my capital and I get a nice little benefit of that money back from them.
I love it. I love it. Well, you are leaps and bounds ahead of most of the population out there who's sitting at a W-2 with a 401k that they're just month after month after month feeding dollars into the stock market roller coaster. So great job in the last year. Congratulations on jumping in, and I'm sure this will reap very good rewards for you in the many years to come. So and I would say, as far as kind of the squirrel effect here, where you get excited and there's so many different
Yep.
opportunities out there. You can do absolutely anything in real estate, but you cannot do everything. So, definitely spread the money around a little bit, but don't spread it too thin, because
Mhm.
ultimately you do got to keep your eyes on the eggs in the basket, right?
Yep.
And if the basket's too big, it gets a little too confusing there. So I struggle with that myself, because like I generally look at deals and think, um, anybody who puts together a deck is putting together a deck that makes it look very, very good,
Mhm.
right? They're not telling you all the holes in the deal. So as they're presented, they all look fantastic. And it's a matter of figuring why this deal is not good versus going in and trying to confirm why it is good. So they've got everything in their deck that tells you why it's such a great investment, right?
Mhm.
So with that, we are already at like 35 minutes, and yeah, I've really enjoyed the conversation, Trevor. You're extremely sharp guy. Clearly, you're doing very big things, not only with your passive investment, but also with your small business and your W-2 as well. So congratulations on the success up to this
Thank you.
point. It's just amazing what you've done already. So I do have a couple of questions I like to ask everybody. So if we can, we'll jump into those real quick. What is, if you had to give advice on the single most impactful resource that you've leveraged in this space, what would it be to the new passive investor?
Yeah, I would probably say, if I had to say that, it would probably be using bigger pockets and just going through there. That's how I found about, the mortgage notes and perusing through their forums, and then I mean, it would also be Jim's group. That's also super helpful. I would say probably it's a tie between the two of those. One, bigger pockets helps me more with the understanding of like the real estate terminology and terms, where Jim's group helped me more understand the deals and the sponsors themselves. So it's sort of like a toss up the two of them. Just perusing those. I know, especially when I joined Jim's group, just going through the forums. Not so much on a daily basis, but on a weekly basis, see what people are talking about. And, then I start to see, ATM funds and car wash funds and those entail. And then unfortunately, I think all the car wash and ATM funds I came across are accredited only, but that's one where I'm like, wow, I never knew. And then I think Jim and Ben was talking to a guy or interviewed a guy, and you find out that to like run a car wash, like it's like 25 cents, for all the materials used. And you're like, wow, that's, these people are charging, $30 a month. I mean, you can do
Sure.
the math there. It's a very profitable, type of
Yeah.
business. And I would have never really thought about that unless I started reading those forums and just trying to get educated.
There's amazing opportunities all around us. Yeah, we don't even know it. So, okay, well, very good. So those are two forums, and they both have podcasts. Outside of those podcasts, do you have any podcasts that you like in the space?
I would probably say, so obviously, Jim's podcast. I would probably say the other ones that I check out. So I check out Chris Savani's podcast. So that's 70, checking out him. I don't do as much bigger pockets. I kind of just got bored of it, to be honest.
Mm-hmm.
I
Yeah.
like Rod Khleif's podcast. He has a
Mm-hmm.
multifamily podcast that's pretty good. And then I like Charles Dobbins. He has a podcast called Multifamily Investing Academy. I might be biased because I produced the show, so I listen to the episodes, but I enjoy it. I think he does a great job interviewing his guests. And if anyone's ever seen, I think it's like Shark Pool Investing.
Yeah.
He's one of the sharks on there, and that was a cool thing seeing that. That's another resource. I don't know if they're putting it on anymore, but it was basically like a weekly thing where someone would come on and present a deal, and you'd have your three sharks. So there would be other real estate investors, and they basically grill the person on their deal, which is perfect for me as a newbie, trying to figure it out, because again, everything seemed good for me. But yeah, those are a couple additional podcasts I like to check out and to listen to.
I love it. I love it. All right. And then our last question is, what would be one bucket list item that you recently checked off your list, or one that you're hoping to check off in the near future?
Yeah, I would probably say one bucket list item would probably be I was always interested in going down to, South Carolina and to Charleston. And, me and my wife made a plan. We're actually having our first baby in June. So time's
Right.
so time's ticking away, before we go out there. And,
Uh,
we decided to let's just go on the trip, and we're actually leaving tomorrow. And, we're
all
going there
right.
for I think like 3 or 4 days. Yeah, we leave tomorrow and we come back I think Tuesday. So it'll be a good trip. We haven't taken one. We went on our honeymoon back in May of last year when we got married, and that was
Okay.
stressful. They messed up our flights. We were delayed a day. It was a very stressful experience. So hopefully this one will be a little bit better. But yeah, that was the one. I always just wanted to check out Charleston. I got into college there, and I was thinking about going there, but it was like 60 grand a year with no financial aid,
Yeah.
and I was like, just for a bachelor's, I don't know if I want to spend 250 grand
Good
on it.
call.
So
Good
I
call.
held off on that. But yeah, that's been a bucket list item of ours. So, occasionally we'll travel to different states. Like we spent like a week in Texas. Now we'll spend like a week or half a week in South Carolina. So we like to just go to
Yeah.
different states, where we're in New York right now. So it'll be nice with the weather. And but yeah, it'll be good. One of those bucket list items. Originally we were going to travel across the country because my sister's getting married in August, but we realized
Okay.
that, with a little one on the way, and it's probably not the best to try to
That would
drive
be a tough
across the
trip.
country.
Yeah.
So we formulated another plan there.
There you go. There you go. Well, very good. Well, enjoy. It's important to get away. It sounds like you were working your butt off too. So take the time and enjoy the life, and congrats on the little one coming as well. That's great. All right. And then finally, how can our listeners find and support you?
Yeah, they can either, feel free to follow me on Instagram. That's just going to be under my name, Trevor Oldham, or they can just find me on LinkedIn. I believe my username there is Trevor J Oldham. I don't know which Trevor Oldham got it before me, but someone else did, so I have to put the J initial for my middle name there. Yeah, and feel free to connect there as well, and just happy to chat.
Awesome. Awesome. Well, Trevor, thank you so much. You brought a ton of value, a newer passive investor that's doing really, really big things already, and well on your way to decreasing your dependence on your W-2 and your side gig income. So thank you so much for being on the show.
Thank you.
And to the audience, as always, just continue to get educated, get inspired around this space, continue to learn about it. But ultimately, at the end of the day, get the education you need to make a decision to invest in your first deal. Once you do invest in your first deal, I think you'll have a similar experience to Trevor and I, and you'll be well on your way to decreasing your dependence on your W-2. So thanks so much for listening today, folks, and we'll look forward to having you on another show.
Well, there you have it, ladies and gentlemen. Another episode of The Gentle Art of Crushing It. It was an amazing episode. We know we sure learned a lot, and we hope you did as well. We want to take a second and thank you so much for viewing or listening to this episode. And please just know that we only ask for one favor, and that is to make this life magnificent. Thank you, and have a wonderful day.